Tonight, something unprecedented in the history of global finance is unfolding. What I need to tell you about is a 200-year-old institution that helped shape the modern world. This is not just another banking story, it's the blueprint behind nearly every financial crisis we've witnessed. This is the origin story of too big to fail. Before we begin, understand this money doesn't just shape markets, it shapes empires, wars, and the lives of entire nations. Every financial crisis has roots buried deep in history, and those roots are rarely taught. At Historiq Finance, we don't just talk about numbers. We uncover the hidden stories behind power, profit, and collapse, the moments where history and money collide. Tonight, we are going back more than 200 years to uncover the origin story of too big to fail. There was once a bank, Barings Bank, more powerful than entire nations. It financed the Louisiana Purchase, helped defeat Napoleon, and controlled the economic fate of countries across 3 continents. At its peak, Barings wasn't just a bank, it was a pillar of global power. But, in 1890, this seemingly invincible institution lost the modern equivalent of $23 billion in Argentina and stood on the edge of total collapse. What happened next changed financial history forever. London's banking elite invented something that had never existed before, the modern financial bailout. And here's why this matters today. The mechanism used to save Barings is the same blueprint governments still rely on. The 2008 crisis followed it. The next one will too. Understanding how Barings became too big to fail explains why this pattern never disappears. Between 1885 and 1890, Barings pushed over $140 million of British investment into Argentina, nearly $23 billion today. If a country wanted railways, cities, or infrastructure, Barings was often the lender. In an era without institutions like the IMF or World Bank, nations relied on private banks to fund wars, salaries, and survival itself. That dependence gave banks enormous leverage. Debt allowed Barings to influence budgets, reserves, and public spending. In some countries, it functioned as a shadow government. This power also helped shape the United States. When America was newly independent, Barings backed it while most European bankers refused. That gamble tied the bank's future to a rising superpower. Without those early investments, America's economic and geographic future could have looked very different. Back in Britain, Barings had already learned that wars weren't won by generals alone. In the 1790s, it financed Britain's fight against revolutionary France. Though personally opposed to the conflict, Francis Barings cooperated, fully earning the modern equivalent of $25 million. Morals could wait. Interest payments couldn't. In a remarkable twist, Barings also helped finance Napoleon's Louisiana Purchase, doubling America's size while Britain and France were enemies. Barings hedged carefully, profiting from both sides while ultimately backing Britain's victory. By the mid-1800s, Barings was lending across Europe, North America, and Latin America. By the 1880s, it had effectively become Argentina's national bank. But the strategy that built its empire would also destroy it. Argentina's economy was fragile. The government paid foreign debt in gold, but earned income in paper pesos. When export prices fell, the system cracked. To pay old debts, Argentina borrowed more often from Barings itself. Instead of pulling back, Barings doubled down. It didn't just lend money. It bought and held massive amounts of Argentine debt. Control over debt meant control over policy. But when Argentina faltered, those bonds turned worthless. From 1881 to 1890, Argentina borrowed heavily despite stagnant revenues. Gold reserves drained. Public projects expanded with little return. Speculation exploded. The Buenos Aires stock market became a bubble fueled by easy credit and optimism detached from reality. When gold payments were suspended and inflation surged, confidence collapsed. Political unrest followed. Investors fled. In 1890, Argentina defaulted. That default hit Barings directly. Its guarantees, loans, and securities collapsed together. Nearly half its balance sheet was tied to Argentina. Panic spread from Buenos Aires straight to London. By October 1890, Barings carried $15.7 million in liabilities, and 8.3 million in near-worthless securities. Credit froze. Interest rates spiked. London's financial system stood on the edge. The Bank of England stepped in. With support from France and Russia, it secured gold reserves and assembled $17 million in rescue funds guaranteed by London's top financial houses. Not out of charity, but self-preservation. If Barings fell, they would follow.
The partners surrendered their personal wealth. The remains of the bank were sold off. Barings survived, but the system had changed forever. This was the first coordinated financial bailout in modern history. It sent a powerful signal. If your collapse threatens the system, you will be saved. Risk would be rewarded.
Economists hadn't yet coined the term moral hazard, but the lesson was clear. Losses would be socialized. Profits would remain private. Barings survived the 1890 crisis, but eventually collapsed in 1995 due to rogue trading sold for $1. £1, a dramatic end to centuries of power. The truth is simple. Barings was a warning written in debt and denial. Global finance can hold nations hostage, and when greed meets weak accountability, collapse becomes inevitable. The names change, the scale grows, but the formula remains the same. Power without responsibility, risk without consequence. Whether we learn from history or repeat it again is still an open question. Thank you for watching. Subscribe and stay tuned for our next video on historic finance.